The world is facing a climate crisis. Heads of state met at COP27 in Egypt last week to discuss a framework for dealing with the immediate threat of global warming. Now, a new initiative coming out of the world of crypto called Regenerative Finance, or ReFi, aims to use the innovations of blockchain technology to help the world transition to a low-carbon economy. We checked in with one ReFi venture to find out what this is all about. Paul Gamble, CEO of Nori, welcome to Yahoo Finance's The Crypto Mile.
Thanks for having me, Brian.
Paul, to begin, can you explain what is regenerative finance, or ReFi?
It's a movement that's been growing over the last year or so. I think really started taking off in 2021. But the idea that we can utilize blockchain and crypto tools to create platforms, services, and other things that can help solve climate change and other environmental problems. Like, let's use these financial tools to solve large problems for the planet.
So what does Nori specifically do, and how does it help mitigate climate change?
Yeah, so Nori, we've been around a lot longer before there was even anything called ReFi. We were started in 2017, and what we are is a carbon removal marketplace. So it's an acknowledgement that climate change is a pretty straightforward problem. In fact, there is just way too much carbon dioxide floating up there in the atmosphere. And carbon isn't evil or immoral or anything like that. It's just in the wrong location and we need to move it. And if we want to get people to move it, then they need some sort of incentive to do so. And what our marketplace does is we connect what we call suppliers, people who are removing carbon dioxide from the atmosphere, with buyers who are companies, businesses that are trying to become carbon neutral, carbon negative, and they can't do the carbon removal themselves, so they pay other people to remove the carbon on their behalf.
So can you describe the type of technologies that are used for carbon removal?
So there are a lot of different ways that you can remove carbon dioxide from the atmosphere. There's really only one method of doing so today that is commercially viable and scalable, and that is through soil organic carbon. So farmers changing their farming practices in a way that ends up building up the organic matter in their soil, and that's pulling CO2 out through photosynthesis, and then increasing the quantity of microbes and fungi in the soil. And that's called regenerative agriculture as an umbrella term. And so these farmers are doing regen ag, and then they're increasing the amount of carbon in their soil.
So why do we need like a blockchain crypto alternative to all this? Why can't we just use the old-fashioned methods of intermediaries in traditional finance?
There are a few sort of interesting problems or challenges in the carbon space that are kind of unique to that space in particular that are solved really elegantly with blockchain. And the first and foremost is that when I first started researching this space in 2015, I was looking at how big is the market. I was reading analyst reports, like trying to understand how much money are people paying for carbon, how many tons of CO2 are being transacted upon. And what I found was that the analysts would break out the carbon sales into two different buckets. They would say there were the primary sales and then secondary sales. And I thought that was just weird on the surface, because why would you sell a ton of CO2 more than once? Like, once it's been removed or avoided, the action is done. Like, the benefit to the planet is done. And I came at this from a perspective of, well, okay, I understand why you would do it that way, but I think we can do it a much better way that would actually accelerate the rate at which we're drawing carbon dioxide out of the atmosphere. So if we want to really have actual significant impact and build an industry that is capable of solving the problem of climate change in this century when we need to do so, then we need to be redesigning it from the ground up so that every dollar spent on carbon results in net new carbon coming out of the air. And by that, I'm implying that carbon dioxide should not be traded. We should not be trading carbon credits. We need to have some other thing that we can trade, but we should not be trading the carbon itself. So the way that we designed this at Nori was to say, when the carbon is removed, we create an asset that represents that. We call it the NRT, Nori Removal Ton. And it's actually just an NFT. And so when that NFT gets sold from the supplier to the buyer, It goes into the buyer's wallet and then it's made non-transferable. It's owned by them forever. It's visible in their wallet. So it's really straightforward for the buyers to go show their stakeholders, whether that be their customers or their shareholders or whoever, that they can take credit for that particular carbon being removed. But then if we do that, if the carbon is retired and not allowed to be resold, then you can't build a commodities market off of that. How do we know what the price of this is? And what is the asset that traders who want to trade this type of thing can trade? So that's why we have a second token model. So there's a 2-token model here. There's the NRT and then there's the Nori token. And the Nori is a fungible token and it's a deflationary model. So there's a fixed cap of how many tokens there will ever be in circulation, 500 million. And one Nori will always purchase one NRT. So this Nori token is that financial tool so that everyone can understand this is the value of removing a ton of CO2. This is how I can create a forecast for starting my own business. You can take that to investors and so on. So that's how we're using blockchain in this. And it's really only through the power of blockchain and crypto that we're able to solve that problem, because we can enforce the immediate retirement on chain, and then we can create this alternative asset that is the mechanism for price discovery.
Paul Gamble, CEO of Nori, thank you so much for coming on this week's episode of the Crypto Mile.
Thanks for having me, Brian.